Can one small number really tell a big story? Today, I'm going to show you the quiet figure that's speaking louder than any headline. Stay with me until the end, because this is not hype. This is not rumor. This is raw data, and what it means for anyone watching the Iraqi dinar closely. Welcome back to your channel, Iraqi Dinar. Today, we focus on facts, no secret sources, no dramatic predictions. Just one small gap in the numbers and why it matters. First, let's step back. For years, the Central Bank of Iraq has maintained a steady official exchange rate. That official rate acts as the anchor for government budgets, contracts, and major transactions. Meanwhile, the market rate reflects daily trading activity. When the official rate and market rate are far apart, it signals fear, shortage, or weak confidence. When they move closer together, it signals trust and improved supply. Now here is the number that stands out. The difference between the official rate and the market rate is currently 7.85 dinars. That equals roughly 6%. It sounds small. But for this currency, it is significant. A 0.6% gap tells us that traders and banks are no longer demanding a large risk premium. It tells us dollar supply is meeting demand more efficiently. It tells us confidence is improving quietly. And this tightening did not happen after a loud announcement. It happened gradually. Through steady market behavior. That kind of movement is often more meaningful than headlines. When the gap narrows, businesses can plan better. Importers can price goods with fewer surprises. Banks manage dollar liquidity with less stress. Volatility decreases. Stability increases. So what is supporting this smaller premium? Oil is a major factor. Iraq sells oil in dollars. Strong export flows bring consistent dollar revenue into the country. That steady inflow helps meet market demand and reduces pressure on the exchange rate. Foreign reserves are another key piece. Strong reserves act as a safety cushion. When market participants know the central bank has substantial reserves, panic buying declines. That expectation alone helps keep the premium tight. Policy consistency also matters. Maintaining the same official anchor over time builds credibility. Credibility reduces speculation. Reduced speculation narrows spreads. That is exactly what we are seeing. But let's stay realistic. A smaller premium does not guarantee a sudden revaluation. It does not promise instant conversion events. It simply makes stability more achievable if other conditions continue to improve. There are still risks. Old disruptions, political instability, or external shocks could widen the gap again. So the correct mindset is cautious optimism, not excitement. If we compare to a year or two ago, the spread was much wider. Traders priced in higher risk. Dollar shortages pushed the market rate far from the official anchor. Through gradual reforms, improved banking channels, and normalized dollar flows, the gap has steadily closed. That gradual convergence is important. Structural progress is more durable than sudden spikes. The banking reform plays a quiet but critical role. As more dollar transactions move through formal banking channels, the need for parallel market activity declines. Transparency improves. Risk premiums fall. If you are holding dinar, here is what you should monitor. First, the premium between official and market rates. Second, oil production and export figures. Third, foreign reserve updates. Fourth, official banking reform announcements. Fifth, global commodity price trends. If the premium drops below 5 dinars and stays there, that would signal deeper market alignment. If reserves grow and oil exports remain strong, that would reinforce the trend. Think of the 7.85 dinar gap, about 0.6%, as a confidence meter. When confidence rises, the premium shrinks. When confidence falls, it widens. Two scenarios exist. In one, continued oil strength and reserve stability push the premium even lower. In another, an external shock reverses progress. Both are possible. The difference depends on sustained support from fundamentals. Ignore loud rumors. Extreme claims rarely rely on data. Numbers are your compass. Watch the premium. Watch reserves. Watch oil revenue. Let facts guide you. Here's a simple checklist for the coming weeks. Check the premium daily. Follow reserve reports. Track oil exports. Monitor banking reform updates. Avoid impulse decisions based on unverified claims. Patience is difficult. Long waits can create emotional decisions. Stay balanced. Prepare but do not gamble. Stability improvements are positive, but they are not a finish line. Let's return to the standout figure. 7. 85 dinars, approximately 0.6%. A small number with meaningful implications. It suggests the system is gradually moving toward tighter alignment and improved stability. This is not the end of the journey. It is a measurable step. Keep watching Iraqi dinar. We will continue tracking the data. Quiet numbers repeated over time become powerful trends. Stay calm, stay informed, stay prepared. Until the next update.